either have questions about a certain pair, look over a certain thing, or ask questions about support and resistance or a trend line or anything that you're seeing, the GBP election, anything at all. Now is the time to have somebody walk through it with you who may be able to help you see it in a different way. So this is your moment. Private Telegram messages aren't so much because, well, that only helps one person. This will help anybody who decides to watch the recording. Let's see. Looking for Donna. See if my Donna is on here. Real quick, hold on. Sorry, bear with me. There we go. I'm gonna go ahead and share my screen. If it will let me share just a portion of my VPS and click share. Of course, that's not gonna work. So we're gonna come up here, share this part. Gotcha. Okay. Hey, Chris, how's it going? Are you able to talk or unmute?
Hey, how you doing, Jenny?
Wonderful. And yourself?
Pretty good.
Yeah, happy
driving a train right now.
Well, that'll work. Well, thank you for jumping on and gracing me with your presence and your voice. I super appreciate you. So is there any specific pairs you want to look at? Anything at all?
Not right now.
Okay, fair enough. Fair enough. Hey, real quick. So Elvis was kind enough to put in the chat, and I concur with him 1000%. Everyone's going to want the fast money on that election for GBP, but more people than not are going to blow their accounts. More people than not are going to lose multiple tens of thousands of dollars and possibly six figures on a single move. So whereas, yes, of course, even I want to catch the GBP move. Everybody does. We would be a fool not to. If you don't know what you're doing, you don't have a trade manager set in place, please don't try to catch that GBP move that's coming. We know it's coming, but it may not be worth your risk. So this is kind of the moment where a wise person may sit back and say, I'm going to watch what happens. I want to be part of the day. I want to experience the day. And this goes into your toolbox for future experience. Otherwise, just don't fuss and whine at everybody when or if you blow your account, because there's a high likelihood that people are going to blow insane amounts of money, kind of like what happened with the NZD a year and a half, 2 years ago. It will be insane. Connie, there is an election for Brexit on Thursday. My understanding, it's pretty much in the bag. Boris is going to win, but when that happens, it's going to make a huge impact in terms of the GBP as well as the euro even, but mostly the GBP is going to be massively affected. And if you look at the actual currency, if you look at what it's doing, a lot of people they have their opinions. I'd rather stay out of the opinion. I just know it's going to swing. It's going to swing hard. I'm guessing it's going to go both ways, but the biggest way I'm thinking is up. We'll see. Because everybody and their mother wants to sell that pair. So just be careful. Of course, I want to sell it too. Everybody does. We would be a fool not to. But it may be in your best interest long-term to not make the decision to do that. So if there's any questions about that, or if anybody's in any swing trades, I don't care how much you're up. I don't care if you think it's going to pay off your mortgage. Please protect that trade. You're better off knocked out in profit than losing, your potential $50,000 account. It's totally not worth it. So that's just my 2 cents. Take it or leave it. And Mr. Elvis, he's a signal giver provider in the 6-figure challenge, a SuperEZ membership group. And I promise you, he's thinking the same thing. So everybody else who's like, take it, take it, take it. And a few other people I respect also called signals on that. Yes, that's Thursday. It's going to close at 4 p.m. our time, well, Eastern time. My understanding is that's when it closes. It's 4 p.m. Eastern time. But keep in mind, the election happens for X amount of time, and that's when the results are done, or I can't say how it works there. I can just say what's happening here. So that's about it. Okay, so what we're looking at currently, we're going to avoid the GBP pairs on principle and being a good steward of the position and leadership God has given me. I am not going to discuss GBP pairs with you other than to say, stay away. So that's my decision. You can like it or lump it, totally up to you. Everything else on the table, we know FOMC is Wednesday. We know that's going to make a pretty big bump, and we also know the interest rate's going to make a bump. So trade USD pairs with, a grain of salt. Having said that, this massive drop on USD CAD, of course, we needed the pullback. Now we'd be looking for the continuation to the downside, mindful of what those two things do. We have, if I go to a bigger time frame of what's happening with the US dollar, I'm going to zoom back out so it's not so clutter, ugly. I'll even take the fractals off. If it will let me take off one of the things on this chart. Delete it. There you go. A little bit more clarity, just to stay the course. Thank you, Barbara. I adore you. You're definitely my rock sometimes, just in case I haven't told you lately. But so this is the day chart. We know that already that we had our breakout move. We had a double top that happened, but now we have a railroad bottom. This impulse move to the upside and the impulse move to the downside kind of makes this a interesting pair. So we have crude oil, which is going to affect it massively. That's tomorrow. And also we have our FOMC. So if you decide to take this pair, totally up to you. But what you would be looking for now, going back down to the 4 hour. Let's scroll over. We have our triple arrows to the upside. So does it mean I'm going to look for a buy just yet? Not yet. Here's your arrows. There's a very good chance it's got to pull back some more. So you'd be looking for yourself for a minute before it kind of goes back up, which would be in conjunction with that daily time frame. So there's two ways to trade this. You can trade it after it pulls down. So you'd be looking for an entry here in and around that average daily low, or the late entry, which means you're going to have to deal with more drawdown and a bigger stop loss, is once it breaks out. So when it breaks out of this high range, then your daily trend is confirmed. Then the way the market is moving is confirmed. This isn't a super risky pair. It's not a super fast mover, although volume is picking up. So you don't have a lot on the line either way. Totally up to you and how you want to do it. But for right now, I wouldn't be looking for that immediate buy, with the exception of news. So does anybody have any questions on USD CAD? Anybody at all? And some of you guys really have to come to our morning thing. It's way different. You guys hang out and stuff. Seriously. It's a real thing. Okay. Where's it at? Okay, gotcha. Sorry, I was just checking that message. So similar story in terms of USD JPY. We were in that trade last week. We did really well with it. We know we need a pullback. Do we know for sure if it's done pulling back? That's a bit of a rough call with the news and such a slow mover. I don't really think it's made the correction that we need to make yet. But also, that's kind of part of it. We are ultimately looking for the continuation for a buy. I know we're having triple arrows for a sell, which means, yeah, we might end up selling down a little bit further. But if we look at the overall kind of sentiment of this pair, overall, we still need that pullback. We are going up. We're probably still going to continue going up, but we haven't had that full, 31% retracement. We haven't had that yet. So trade this mindfully if you guys will. Let's see. I'm going to go to odd USD. All the USD pairs, skipping the DVP because we're not playing with that. People lost their butts already today once. It already happened once. So a bunch of people made that call. If you look here on Australian USD, one of the safest buys I can recommend, like we talked about in our other classes, is on USD. And there's a reason why. The Australian dollar it's an all-time high, a historic high. So it's an all-time historic high, not just a new high. It's historic high. So when you factor in the economic reasons, and then you take market structure and market sentiment, you have a head and shoulders family kind of forming, not exactly perfect how we want it to be. The head is not quite bigger than the shoulder. Take that with a grain of salt, but this is the day chart. And if I zoom out and make this really ugly for you guys, we are due a correction. And we finally are having this kind of flag formation. We're finally having what we would call that breakout pattern. So we made a double bottom, great. Now we came back to make a new low. The problem is it wasn't a lower low. So we're finally at a place where we're going to start looking for the actual long-term buy. And what's possible with this long-term buy, compared to like your risk to reward on a slow moving pair, 500 pips easy whereas your stop would only maybe be 150. If you were playing it really smart, it might be 70, 60 pips. So very simple and easy trade to take. I am definitely in it for the long haul, but keep in mind that odd NZD is also making lifetime lows or something along those lines, which means they're going to have a lot of foolery on the Australian dollar, as Uncle Pap would say. So be careful of that. But I love that as a buy, and you guys can write that down. Hey,
Hey, Jenny, this is Brandon. I have I'm in that trade and the AUD Me and a friend of mine both entered those trades. And I saw this it was I think yesterday. I saw this morning where I think you were looking at AUD and you were showing how I guess kind of a mess it was. But I'm in it, and I mean, it's down a little bit, but I feel like I just need to hold on to it. And it's not down a lot, but I just wanted to get your input on that. And I guess just the other Australian pairs I closed another one because when I just took a little profit on, I can't remember the other pair I was in, but I just wanted to, I guess, get your input on that.
well, thank you for stepping up. I super love it. You guys come up here and talk.
Yeah.
Real quick, yes, what I don't know exactly what we were saying this morning, but as to just start fresh, let's analyze with where we're at. Overall,
Okay.
we're looking for this to buy. So we busted through this support right here. We're making a new low, but again, we're turning around. So I'm also looking to buy this pair. But when I come to the 4-hour chart, as you can see, that's that perfect double bottom that we want to see. So unfortunately for you or our best entry is now. But for you and I, we're already in drawdown. I don't know how much drawdown you're in. I'm not in a lot. But
Yeah.
let's see how many pips am I up. But if you were looking
It's not
for
bad.
last entry, this is it. Because look,
Okay.
for anybody who's not currently in it, and it doesn't mean this is going to win. Nothing is guaranteed, but you just take your best probabilities, and then you learn to see the market that way. So, for example, if you took an entry now, and your stop loss was, let's just say 30 pips, give it a little extra room to breathe, and your potential was a minimum of 160 pips. Okay, let's make this stop going with my magic mouse. Let's see. Let's try that one more time. So what's that risk to reward ratio at 30 pips to 170?
That's worth it taking, yeah, for sure.
And that's minimum. So overall, we're expecting that to go more. The odds are most of us don't hold it that long, and that's that level of honesty that none of us really get to with ourselves or with others most of the time. But let's say we take the entry, it's going to come around here, it's going to either stall or break through. But either way, you've got enough pips on that first entry. It pulls back, you take another entry. Even at 3 to 1, so 30 stop loss to 100 pip take profit, you're still at a good trade.
And because I first, when I first joined, me and Irvin had a session and he helped me with my charts and everything. And the way that I've been looking at it, tell me if I'm wrong, because I think the guy, was it Jamie that was this morning who took over on your session, but he was saying how it's really good. Irvin was teaching me how simple, which is how just to keep it simple, which is great. But just going forward, I would want to be able to analyze it, I guess, from a different perspective, using the MACD and the RSI stuff that I'm not using right now. But every time I look where triple arrows do come in, or the big arrow comes in, at least, even if there is some drawback or it does drop, eventually, I mean, it's going to get back up. So I don't see the point in having a stop loss, and I don't see the point in selling out a trade when I'm losing, because it's going to get back. I mean, if I can withstand it and just be patient. Am I wrong on that? Or can you just give me some insight on that? Because the way that when people are taking losses, I don't understand why you're so quick to sell when it's going to get back. It's going to eventually at least break even at some point.
Well,
is that a bad way to look at it? Or
That's a really interesting train of thought. So let's play with this topic for just a minute. Let me find a more naked-ish chart to the best of our ability. Let's go to a pretty lame pair, something pretty basic that flows pretty well. So first off, I'm never going to argue with another trader. Better yet, one I think that is successful. So whatever Irving told you, fantastic. If it has helped you or made you profitable, great. Whether or not I see it the same way, that's fantastic. So despite that part, we all see the market in our own ways. But what you're saying, there's not a lot
And
of
he never told me not to put a stop loss. I'm not going to say he told me that. He didn't advise me that. I'm just saying from my perspective, I wouldn't see why I would lock in a loss if in the future, if I hold on to it, I can at least take some profit or at least break even. I don't see why I would do that. But
how big is your account, Brett?
I just started it, so I put it's like $250 or something like that.
Okay.
Hi, Janie.
Can
I make a statement about this? This is Rafa from Rio.
Yeah. Let me say something real quick first, okay? Because kind of a big deal, and then I would love to hear your input. So here's why. Let me just tell you where I'm at. So ready? I want you to get over, like, change your mindset for a second. Ready? And these are Heikenauchi. These are Heikenauchi candles. But here's why. Okay. So let's say we took. Oh, let me stay still for the love of God. Let's say we took a sell at that doji. This is the daily chart, so it's extreme for a reason. But this is a slow mover. So bear this in mind, and let's just mentally and psychologically, emotionally play this out for a second. Let's say we have a $230,000 account. You ready? Okay, so we're in profit, but let's be honest, we were on a cruise in the Bahamas, or we were distracted for whatever reason, we never locked it. Okay. This doesn't seem like much, but depending on the broker and the everyday and the amount of drawdown, you have a $250,000 account. And let's say you have a few standard lots on here. Let's say you didn't overlever. So you only had 10 on the net size of an account. That's way doable. Do you realize that this one move on a very slow moving pair just cost you your entire account?
Yeah, and I understand that where you can wipe your account out, but if it's, I mean, when you're starting out with such a low amount of money, if you see that happening, I mean, can't you just add some more money into the account to prevent it from blowing it? I understand when I get up and when it grows, why you would definitely want to prevent wiping out the account. But at this stage, I'm saying, why would you lock in a loss if you could just like add some money to it?
Okay, I love this conversation like so much. It's intriguing and fun for me. So here's my train of thought. I can't control yours. Connie was kind enough to say I don't put a stop loss in, but she trades less. You'd have to have deep pockets.
Oh, I see that.
So I'm all for the whole concept of high risk. In fact, I've made a lot of money based off of that. Now my safe trading is safe trading. It's pretty reasonable. It's daily, weekly, or 4 hour kind of. I compound it slowly, pick a few trades, and I ignore it. I purposefully don't log into that account. I do my due diligence to be effective at low risk and low management. Now for my high risk, I'm not going to keep adding money to a losing position. What I will do, on the other hand, is I will create a self budget for my, hey, whoever's drawing, chill. What is this? If you're not child, like seriously, hold on, Claire.
I thought you were doing that. I was like, is there something I should be looking at right now?
Okay, so here's my perspective, and it doesn't make it right or wrong. It's just a different train of thought. So I will not keep adding money to a losing account. I am not going to be that person who adds $100 or $200 every 2 weeks to a position that's losing. Now I will be willing to create a self budget for myself that says every 2 weeks I'll add a $200 to an account. If I blow it, I start over. I'm okay with that. I can afford that in my budget. So I will be the person who says I'm going to trade high risk. I'm going balls to the wall. Sometimes I'll blow that $100 or $200 account, and then sometimes I turn it to $20,000 or $50,000 and withdraw it. And at the end of the year, that few $100s I invested every few weeks has yielded me better than six figures, even with that one size, one style of trading. So cash in hand after fees, I've made closer to $250,000 just with that level of commitment. Now, to me, it sounds really foolish to, if I'm going to add another $200, I'm going to add it to a fresh account or to a fresh mindset or a fresh strategy or a fresh, I'm not
I
adding
got you.
money. Like that's just like,
Yeah.
give it away, give it to me. Hello.
Yeah. Yeah.
But
Yeah, you're right. I probably should change my mindset on that now because I go balls to the walls too. And if I grow it, I don't want to, I could see how I could get into a situation I don't want to be in. Yeah.
if you have the pockets, honestly, stick with a strategy long enough and reload the account every 2 weeks, but no stop loss. So taking this, which is a prime example of technically, is this probably going to come back down to where you got in at? Oh, silly me. So hold on. Close that.
What was that? What'd you say?
Oh. There we go. Odds are, is it going to come back down to here? Yes, it is. Odds are it will. Okay, eventually.
Mhm.
But if you already blew your account, and I don't mean the $200, I mean you have to
Yeah.
stop treating your $200 like it's $200 and start treating it like it's $250,000. And when you trade like that, you're gonna do exceptionally well. You're gonna be like, oh, whoa, I get it.
Yeah. Yeah, you're right. Because I saw you said I guess for the challenge that I have, you don't want to add it. You don't want to put a bunch of money in there because you want to, is that so you can kind of train yourself the discipline from the beginning or you know what I mean?
Yeah.
Like, is there a reason you don't want to overfund your account from the beginning?
Well, I didn't. I was stupid and I was wrong. So if I could stop you from making some of the mistakes I made, like let's assume that you are pretty financially well off and you can afford to blow a few $1,000s a few times. Let's be honest, how many times can you afford to blow a few $1,000s? Because I promise you it's going to be more than a few.
Yeah. Yeah. And I guess that while you could have just been started off more disciplined and not blown it, and then by that time you would still, so you would kind of be wasting your time doing that if, you're right.
Just a different perspective. Like I'm all about just us growing together.
Yeah. Yeah. And as
Jenny,
far as the, go ahead.
no, I'm sorry. I just want to join this conversation. This is Rafa from Rio. Hi, everyone. Good evening. For the evening, guys. I'm here from Rio, and so we are already on the evening. This is an interesting question, but I would like to invite you to go to this audit chief chart that Jenny was analyzing and make you go to the monthly time frame. Go to the monthly time frame. Audit chief, monthly time frame.
Yes, sir. Let's do this together.
Yeah. Look at this. Look at this big week, biggest week that we have. Yes, exactly. This is the major flash crash that we have on the markets the last 10 years. I don't know. Look how many pips does it went down. Okay. This flash crash, which is the technical name of that, caused the failure of one of the biggest forex broker in the world. And do you know why does it fail? No, we don't know. The Swiss Federal Reserve from Swiss just lowered their taxes. Brokers just went crazy. Traders just went crazy. And look, it was just a flash crash. The prices go down and then they went up. So that's why stop losses are created to prevent bigger, major losses like that. You have just $200, okay, on your account, but the forex market is a 6 trillion market. Big hedge funds are trading forex every day, and they have to have stop loss because of this kind of events. And if they have stop loss, we should have stop loss as well. Of course, on the minor movements of the markets, you can go 50 pips, 20 pips, 100 pips, 150 pips. Depends on the time frame that you are trading. But it's always to prevent a major loss. I don't know, a couple of weeks ago, I lost, and I can say that I have 4 years in trading. I lost 2,000 euros. 2,000 euros. It is unacceptable to me, but it prevents me. It prevents me of losing 4,000 or 5,000 euros on CAD chief position that I was absolutely over leveraged. I made a mistake. So stop loss prevents you to increase your mistakes, to make your mistakes bigger. And not only your mistakes, but market mistake, like this audit chief. It is absolutely a mistake from the market, but it happens. Sometimes it happens. Trump elections shake the markets as well. Brexit shook the markets as well. All those traders would remember, you know, United States, Iraq, the you know, World Trade Center, terrorist attack, you know, biggest shake markets. So that's why stop loss exists. They are absolutely necessary for it to prevent us to blowing our accounts and blowing our trading hopes. So you have to adjust that. Of course, you're gonna make it on the time frame that you are trading, but you have to adjust that. You have to adapt that, because markets are absolutely a freaking animal. You can control it. So you have to be very careful about that all the time, you know. That's why.
Yeah, you're right. Yeah.
And I don't know how long are you being a trader, but that's something that you must keep in your mind. You are only learn about forex when you lose money. That's the worst lesson, because when you lose the money, you know exactly how painful is it, how absolutely painful is it. So oh my god, I have to had a stop loss on that position. Oh my god, I'm absolutely over leveraged on that position. I was too confident about that. Oh my god, Trump election. Oh my god, Brexit election. Oh my god, Boris Johnson is gonna be elected, and I'm absolutely over leveraged on 5-6 pairs on GBP. So I lost all my money because, you know, something happened in midterm, and the market shake. The market goes 100 pips up, 100 pips down. Trevor and 1,200 pips up, Trevor 100 pips down. It shooks a lot in this event. So that's why you have to have a stop loss to prevent your accounts, prevent your dreams to just vanish from the market. You know, that's all. Thank you very much. Sorry for
appreciate it. Yeah,
talking.
thank you. Yeah,
What do you think about what he said?
I agree with that. Yeah, it is trial by fire. So those lessons you learn by losing a lot of money, you want to prevent how much you can lose. But yeah, I think I'll start incorporating that a little more as far as the stop loss. But as far as the AUD and those two pairs that we just looked at, I guess I'm in a good position on that. Where would you recommend me put a stop loss at on those pairs?
Okay, so again, it should be 1,000% your call, right?
Yeah.
Okay, hold on. So let's go back to that. Let's go to a slightly better one. So this is the
And with the I guess I'll let you answer that first. Next.
Oh, go ahead. What's your other question?
I was just gonna. It was about the MACD, so it's fine. Yeah, you can go ahead. But I was just gonna ask because they went over that a little bit. I'm not too familiar with it, but I guess I don't know how to read it that well as far as an indicator, because I don't have it. I just put it on my demo account, but I don't have it on my. But I haven't really used it. So.
Which one? This one or the other one?
Yeah, that one. Yeah.
Gotcha. Okay. So let's start with the stop loss. So if it was me, I remember since you work with me in other groups, you know, mostly I use trade managers, and I use trade managers differently in different accounts. So having said that, okay, it's going to be a very variable experience, which as long as you understand that, that's fine. I would leave it room past this resistance. So it has room to spike around. The stop loss prevents you from being a gambler. Oh, so a lot of people are adding to the stop loss conversation, just so you know. But
Oh, yeah.
money management. So my stop loss would be in and around this area. Okay. Do I know the exact PIP? No. Do you know? Every broker is a little different. Every moment's a little different. 1,000% up to you. Okay.
Yeah.
But ultimately, from where price currently is, or maybe if you got in a little bit up here, right, you're still looking at a pretty reasonable stop loss compared to your percent of gain. So I still see this as a pretty valid trade. Now, what was the other audio, Steve?
Okay. For me, the question I had.
Yeah, the other one.
Yeah. Oh, it was. Oh, the other pair. It was AUD USD.
Okay, let's take a look. Okay. Where is it? I know this answer.
There it is. It's right. Yeah.
I know.
And trade manager, this was the first morning I saw you on the other one. What's the what is trade? Is that something that what is the trade? What do you use when do you use a trade manager, and how do you use that? I'm not familiar with that.
You use 100% of a trade manager 100% of the time. Get one, have free ones, have extra ones, have backup ones, and apply your trailing stops and your stop losses. Like, that is the best trader you can possibly be, because finding a winning trade is easy. Managing it and securing it is hard.
Yeah, that's the hard part.
So
is that
what?
Can you show me an example on how you use a trade manager, or what's the best one? So that's something you download in the marketplace?
Yeah, there's
like
one
an indicator, or
there's one that's called the Ron's something. It is free. I have a different version than the one that's out. Mine's a little more simple, thank God. But it's free. It works. There's a lot of paid for versions. If you're going to pay for anything, I would stop paying for tools that give you how to find a trade, and I'd start paying for tools that actually manage your trades.
Yeah. Do you pay? What's one that is there one that you bought, or one that you think is good that it isn't a free one, or?
Not one that I can ethically recommend because it's part of a different company that I'm a lifetime member of. But
I got you.
I do. You did your trip. I do have one. Vernus Washington, Hollywood Trade King. He's in the SuperEZ. He is a great guy, a great man, a great person to work with, and he recommends one. He has an affiliate link. That will go real well. So
I'll ask him about that.
Yeah, he's got a video. It looks really good. The only thing it's lacking, and I don't know this because I don't use it, is I don't think it will manage all the trades that you have open. So he's a great guy to do that.
Okay. So you said he's got like a video on how you set it up and how to use it and everything.
Yeah, he's got a video about it.
Okay,
So
cool. Okay, I'll ask him about that. Okay.
Yes, sir. But okay, as for Australian US dollar, same kind of thing. I do believe the Australian currency pair individually is playing around a lot, and here's why. Know that everybody is trying to buy this pair. When everybody tries to buy a pair, we know what happens. So we've all been part of it. Lord knows I have. We finally have an impulse move to the top side, which is great. A couple people took this one. It didn't work out so well for them. Part of real life. They got knocked out even for a slow mover. We're getting that impulse move, but we had one here too. So we need that confirmation where it retests 50% and doesn't break lower. So that's really what we're waiting for. And this is even the best one. I don't even trade this pair, but this is worth the risk because, again, that's a pretty big move.
Yeah.
As opposed to that. So.
Okay. Cool. Yeah, appreciate it.
That's awesome. Well, I hope that helps.
Yeah, thank you. It helps so much. Thanks.
No, thank you for being willing to step up, because not everybody comes and talks, and I promise you, like, the vision I had was interactive. So when y'all are interactive, I'm a happy camper. I'm happy.
Oh yeah, I'll be interactive. Next time I'll share my screen next time if we can maybe look at some stuff. As I'll get the trade manager and then do some more things, and then I'll definitely be bugging you so during the session. So I appreciate it.
Hi, Daddy.
Hi, baby. Hold on. All right.
Hi, Grammy.
It's not you.
Oh, no, you like Grammy.
All right. Thank you.
You want my
Okay,
Grammy?
All right, bye.
Oh, they're adorable. Actually,
She's sweet. She thought it was her grandmother, but it's not. She said hi. She thought you're her.
Yeah.
Cute.
That's Grandma.
What'd you say?
how old is she?
Mommy.
How old are you? No, you guys
I
can't.
muted it. How old are you, baby? How old?
Yellow.
She's 2.
Oh, she sounds adorable.
Her name's London. Yeah, she's daddy's baby.
Yeah, Daddy's baby. That's yours.
Yeah.
That's your baby. Daddy, baby.
Well, thank you, Jenny.
Thank you, Brandon. I appreciate you. I super adore you.
You're welcome. Bye.
Yes, that's so cute. Oh, and you can't call me Granny, Jessica. I'll have to have you permanently removed, just so you know.
Oh yeah. She thinks when the phone's on that it's her grandma. She just ran in here, but yeah.
That's your grandma.
The rich grandma. Yeah, I do fairly well. I'm very blessed. I think that we all have certain parts of our life that just, for some reason, He honors us and he provides in this way that is without explanation. And then there's other
What are
areas
you doing?
going on. So that's just
Yeah.
reality.
Yeah. Well, I'll let the next person hop on. I appreciate it.
Bye.
Bye.
Bye,
Bye.
Bye, Jenny. Say bye, Jenny.
Bye, Jerry.
That's all. Okay, rich grandma. Yeah, I got you, Rafa. I know. I'll be a rich grandma one day. Well, not today, not for like a lot of days from now, but not today. Okay, so you guys are on the same page. Back to the odd pairs. Yes, we're looking for the buy. Odd New Zealand. Thinking Jamie might want to get close to get getting in that. It's getting ready, but we want the confirmation. As you saw, we had the breakout before, but then it pushed down one more level. So where this goes, we want to see what happens from here. If this is a bigger candle than, for example, this one, but we just want to be mindful. We want to be careful. So that's what we're looking for. This is the 33. We really want that huge push and then for it to come back and test some of it. Lloyd, your microphone is on. Here, I'll mute everyone. Mute all. Continue. There we go. Now, if you want to unmute, you are more than welcome to do so. Thank you, Don. I appreciate you.
Hey, Jenny, this is Joe. Can you guys hear me?
Hey, Joe, how are you today? We hear you.
I'm doing good. I got a question. Okay, so okay, on this odd NZD pair, you're saying that what we're waiting for is for it to cross the 33, right? And then for it to bounce off of it. That would be a good entry for a buy.
Okay, so what I want to see, and it doesn't mean I'm going to get it. So I'm going to make my decisions. And because of all the US and GBP pairs, I feel like it's not one of my favorite pairs to trade, but considering the week we're in, I feel pretty happy about it, put it that way. What I really want to see is it to complete this candle. So 21 more minutes on this candle. And then remember, I go to bed, I don't stay up for London. So I would be looking tomorrow morning specifically to say, okay, did we make one more higher candle? If that happened, great. If not, did we come down to kind of retest that 50%, but did not make a new low? That's what I'm looking for. So I would be looking tomorrow morning when I wake up, which is, my time, 6, 7 o'clock. I usually click through a little bit. and that's it. And then from there, I'm going to make a decision. If it lines up with my rules, probably on the 1 hour chart, I'm going to take this trade because this is not a fast mover. It doesn't have an insane pip value and it's worth the risk. So for me, if I get knocked out, I'm okay with that. There's a good chance you're going to get knocked out. This is pushing down hard. So let's just be transparent with each other in what I'm doing. But I'm okay with the 30 pip stop loss or 50 pip stop loss when my potential gain is 300-400 pips, which this is not one I'm going to want to get in and out of. I will not have a trade manager necessarily running on it. I'll have a trailing stop running on it, and I will move my stop into profit. So I do have a trade manager that does that, but not the ones you guys know of. So it'll basically put me above break even, and then it will either scale me out of the position. So there's so many technicalities here, but that's what I'm looking for. I want to see
Okay,
this.
so I got a question. So when you say that you put you said your stop loss into profit. So as soon as you see it, like, let's say you're up like 10 pips, is that when you move it right at 0? Or because I've done that before and then it'll wick back and then it just takes me out of the trade and I'm just second guessing myself when I should enter again.
Yeah, well, I would love to discuss that topic.
Yeah, because I've done it before, and I mean, I kind of hear what you guys say. Like, it's better for you not to lose at all. And I guess if the trade's gonna go your way, like let's say you're in a buy, it just goes straight up, versus you leaving your stop loss back, and then you were like, let's say up 10-15 pips, and then it comes back like as a retracement or whatever you call it, and then you're like at negative 10 pips. So is that what you guys mean when you say pull your stop loss into profit, where as soon as you're up a little bit, you just put it at break even? Is that really what you guys are saying?
So I think the best answer, and I don't think it's often enough discussed by myself or others, is it depends on which one of your accounts and what style you're trading. So for example, in my safer but very slow and moderate kind of trading account, I don't move my stop into profit nearly as quick. But I'm also not risking 10, 15, 20. Well, I'm not risking, more accurately, anything above 10% in that account. I'm most of the time, I was too chicken to go to 5 or 7% for the longest time. Like my highest in that account was usually 5% per trade is what I was going for. And then I finally got a little bit more courage. I got a little bit more faith and success under my belt. So I was comfortable with 7% and I understood it. And then I even moved it up to 10%. But in that account, I never went above 10%. So when you're trading at a 10% per trade, at the most, you're typically only in 1, maybe 2 or 3, sometimes 4 trades. You're not so hungry or desperate to move your stop into profit because there's plenty of room to move. So again, I'm not worried if it hits. I'm not worried if it doesn't. To me, the wins and losses go into a stack, and most successful traders find it boring. You can tell a lot about how much money somebody's making just by successful trading is it's boring. It's very systematic. It's very here, 1, 2, 3, 1, 2, 3. That's it. Done. Good. So that's sorry, that's part of the answer.
Well, no, it was pretty clear to me because see, I understand now. So if you have a high leverage account and you're doing big lot sizes, you want to, if you can avoid it coming back, because you see some of these wicks, they'll come back and stop hunt you like in an instant, and by the time you know it, you're like out of the trade and you'll blow your account. So I could see where you guys are saying that obviously you got a high leverage account. As soon as you see it go into something, it's better to take your chances of not losing and breaking even. And if it goes your way, well, then it goes your way. So yeah, I could see why you guys said that. I was just having a hard time. Is it all the time? Like, because even on like earlier today, I had I'm using Ron's the expert advisor, and I had it to this. I'm guessing I have it to the settings where we're doing the scalping trades. So I got the notification on my phone, like where I guess my stop loss is moved, and I'm like, oh, that must be the expert advisor. But then I see the candle coming back and it takes me out of the trade, and then it went the way that it was supposed to. I'm like, you know what? I probably have to adjust the settings because they're to I guess the shorter term trades. And that's kind of like where I'm at right now. I'm like, man, I don't know if I should put that expert advisor because it takes me out of the trades. But I'm trying to figure out. I know for like a longer term trade, like let's say you're on like a 4 hour and you're trying to get 100 pips or something. There's got to be like I guess more lax settings. So, and that's kind of what I'm trying to figure out right now because I'm kind of stressing out where I don't want to be looking at my phone too much. But I mean, you just can't help it, especially when you don't have like the expert advisor and stuff. So that's what I'm trying
Excuse
to
me,
figure out. Mhm.
can I make a comment again? This is Rafa from Rio. Well, especially regarding about this trailing stop issue, this is one of the most difficult thing about being a trader. But
And
again,
I'm taking notes, guys.
no, no problem. Take as much notes as you can. But the biggest things about being here in Brazil in our stock trading market, we call that a violent syndrome. You know, because the violinist, it goes with a stick, it goes and going back and go again, and that's the violent syndrome. To avoid that, I have to adjust that with your time frame. So you cannot put your stop loss if you're trading like the 4 hour time frame. You cannot put your trailing stop loss in 15 pips, you know, because the market moves a lot in 4 hours. If you're trading the daily time frame, you cannot adjust your trailing stop to 40 pips. So Genie has this amazing tool which is the bar chart that we are seeing right now.
I've seen it. That's the 1 week ADR
Yeah, but it's
one,
but it is
right?
the
Or
daily
whatever.
average
Is that the one? How do
about this moving
I've
pair.
asked a few times. Mhm.
You have
Yeah,
to
so when it says like 1 week ADR, it says 41. That could be up or down, right? That's what it means on the
up or
day.
down
20
exactly that.
pip ups,
Yeah,
20
that's
pips
the
down, right? That's
that
like you basically.
that's the major movement up or down, right? So if you're trading, the 1 hour, for instance, that we are having right now on Janie's chart, you have to probably adjust to 30 pips or 20 pips. So if you're going 20 pips or 30 pips in your favor, it's probably because it has come to 10 pips or 12 or 15 pips, then it came back 80 pips, 5 pips, 4 pips, then came back again in your favor, more 10 pips, 12 pips, 11 pips, then came back. So the movements, they have already been made, this variation, they have been already been made. So if you're trading the 1 hour, in my opinion, your trailing stop must be in 20, 30 pips. If you're trading the 4 hour, your trailing stop must be 50 pips above, so that's 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 the safer way for you to not go into this syndrome of the violin. Have been always been profit, so you secure your profits, then you just being vanished again about the on the market because the market moves.
Oh
It's
yeah,
very, very
yeah.
frustrating. It's
I can tell
absolutely
you
frustrating. It's
that's what's been
almost as
happening.
frustrating as missing a good opportunity or being stop lost. It's very frustrating. I'm telling you that because again, I have lost a lot of money in this market. So I have been violating a lot of time
I don't feel
about
as
this trailing
I
stop.
don't feel as bad.
I feel very
No,
bad
that's
about.
so that's okay. So then based on what you guys are saying, so let's say I've actually been asking, I think I posted a couple of messages on how to get the ADR. How do we get that? I think about mostly everything is answered. Everybody answers everything real good in the
But look,
chats.
it depends on your pair. This pair that Jenny are showing us, it has a very low move. Look at 41 pips. It's a very low move.
Yeah, that's a
If
slow mover.
Yeah, it's a slow mover. If Jenny changed to GBP JPY, you're gonna notice a bigger movement. So I have to adjust this the 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 median move about the pair and the time frame, especially the time frame that
Wait,
you are
this is,
trading.
hey, I'm going to interject real quick. That was AN and this is GN. So
Look
one
at
of the
Yeah,
that,
that's 147.
100 pips.
That's
big
crazy.
difference.
You can make some
So
money on that one.
yeah, so What does it mean? This pair moves a lot faster. The volatility is much faster. It's bigger. So it can go up and down, up and down, up and down. So your trailing stop must be, a little bit bigger, have to be large. Otherwise, it's just gonna be vanished from the market every time, you know? So it's a calculation that I have to understand about the time
Does
frame you're trading and the pair you're trading.
does anybody have like a good formula for them? For like
No, there's
like
no magic formula. Do you know what's the magic formula about that? Patience.
yeah
You have to be
yeah
patient and not being desperate about making your profits. That's the secret of Forex. You cannot be desperate about your profits. Just your trading goal on your discipline. If you're put your, take profit, 100 pips, 50 pips, let the trade goes on your way. Secure your profits. Absolutely. That's right. Janie's advice is right. Elv's advice is right. You have to secure a profit, but in a matter way that you not lose a potential profit being on this violent syndrome. Because 10 pips, 5 pips, 80 pips, you just go trail your stop loss to your break even, and then the market just vanish you again. And you do it again, you enter
it,
again, 5 pips, 80 pips, 10 pips, yes, you have vanished again. And
that's
you
me,
just
man.
get tired of that. It is very boring about that.
Shoot.
And then
Hey,
suddenly
did
the markets
somebody
just go in the flow and
did
go
somebody
20 more, 20 pips, 30 pips, and you, oh my God, I didn't enter again, so I
so,
missed all the movement.
somebody called you to tell you about me today, huh?
Exactly. That's what happens. Market's always against you. I have to put that in
uh,
mind.
yeah. Yeah, that's the feeling I have. There's this other gentleman there on the chat saying the same thing. I must be getting into all the bad trades or something.
Sometimes it seems personal. Sometimes the
Yeah, it
markets are
is.
doing this for you because you didn't enter, you move a trailing stop in the end, it went against you again. It's kind of
So
crazy, but
so
it's
you're
not
so you're
about
saying
you.
so that's a matter of patience. That's what you think the difference is.
Yeah, patience, a little bit of calculation about your pair and the time frame that you're trading. Just is, it's just logical. A daily time frame, requires 100 pips movement because it probably can move 100 pips. So
O-
your stop loss must be above or below that. That's natural. You cannot
o-
trade a daily time frame expecting putting your trailing stop 10 pips, 20 pips. No, you have to wait the movement. It goes, ebb and flows like the ocean.
Yeah.
So yeah, you have to trade exactly about your time frame
Okay.
and the pair
So
that
I
you're trading.
okay, I got a question. And based on what you said, okay, you see, are you guys able to see my mouse on the screen?
Hey, wait. Here's what I'm gonna do. Ready? You can
Okay.
annotate, so you can click on Zoom, or you can share your screen. So you can annotate, which means you can, or you can remote control my screen, whichever one of those options you
Okay.
want.
Okay. How could I remote control your screen since it's already on here?
Okay, so you need to click on the button that says request remote control while I look on your name. we're gonna do it together.
Where would that be request from? I see stuff on the bottom left. Invite, participant, share, record. Where the heck is that? I don't see that on my screen.
So
It'll be at the top where you say view options. You click on the arrow on the right hand side and you'll see request for remote control.
Okay, I'm trying to see. You're saying it's
See
on
at
the
the
top
you see at the
top right
top
of
where it's green where it says you
Oh yeah,
are
yeah, I see.
viewing
You
Jenny Baker's screen.
request remote control. Okay, I'm doing that.
There you go.
Okay. So then am I able to do it now?
shouldn't mind, dear. There you
Okay, can you guys is it mine already?
go. Yes, it's yours.
Okay. Okay, so let's say this pair on the it says 1 week ADR was 147. So this move that went down, would this be the 147 that it did? Like let's say on the down, if I can't like let's say the ADR said 147. Can I
No,
assume If
Listen,
I measure this move and it's 147,
no. In the last week,
okay.
this pair have moved 147 pips.
These last two green wicks,
In the last 4 weeks, this pair have moved
He's
153 pips. You know, it
he's
can
saying
move or it can't move. That's
yeah.
a
So
median.
okay, so let's say these two green wicks are half of that. We could expect for it to move the rest of the 147 either up or down.
Yeah, let me interject,
he's
gentlemen.
talking about weeks, not wicks.
Okay.
Weeks.
Yeah,
Oh,
weeks.
see, that's where I
Weeks.
got confused.
7 days.
You gotta
7
learn
days in
your
a row.
Portuguese. Portuguese.
Sorry for my English.
Yes, yes.
Sorry for my English. Sorry for that.
So was I correct on that move, the one from the top to the bottom? What can
Oh, wait,
somebody measure that?
Jose, wait,
Yes.
let's go ahead and maybe have you annotate on the screen or share the screen, because I'm pretty sure it's not just me, but I can't see what you're doing.
Okay,
I don't know
so
why, like, so you have remote control if you were to actually click something and do something. So move my mouse. So that's you moving it,
okay. Oh, okay.
moving it. Now you're actually doing something.
Do
So
not close any Jenny's trades, please, huh?
yeah.
No. I'm talking about this move from here to here.
Okay.
How many pips was that one? Because can I actually measure it? What is that? 280 pips, or am I reading it wrong?
In 10 days.
Okay, so that, yeah, well, that's obvious. It's more than a week. So let's say since the ADR was 147, when it was around here, which would be, oh, hold on, man, I'm having a hard time. Hold on. I was actually trying to start it down there. So let's say when I was at 147 here, if the ADR was 147, the possibility is it could either come back up or come down like it did. That's kind of like what I'm trying to see.
Yeah.
Based on ADR.
I'm sorry. What's your name again, please?
Joe, Jose or
Joe.
Joe. I mean, I go by Joe, but
Oh, Jose. Okay.
yes, sir.
Joe, the big thing is this pair can move or is moving averagely 147 pips. It can go 20 pips above, 20 pips low, 20 pips above, 20 pips. You know, it moves fast. It moves on in a certain range that identifies that this kind of move on average, on this 1 week average, have moved 147 pips. That's a lot for just one pair. So that's a very volatile pair. So you have to be more cautious about that when you're trying to adjust your trailing stop. That's the biggest information that you have to kept from that. Well, you can be going for a buy. Okay, you can go for a buy 147 in a row, but it can go 147, can go 50 pips, can go up 80 pips, and can go 50 pips. So it's a very volatile pair. It moves a lot. A lot of pips are involved in this pair. That's what I have to keep in mind. Because if it is a slower pair, the range of pips that it moves is much less. It's much lesser. So
yeah, like the other pair that was only 20. That's as slow
41 pips. It's
as slow as molasses.
exactly. And again, adjusting with your time frame, because the bigger the time frame, the bigger the movie can be.
Yes.
So you have to understand the dynamic of the time frame that you were trading.
Yeah, so basically what I'm asking that is so that's how I guess people more or less figure out how far you can put your stop loss. Like on a pair like this, obviously you're not going to have a 20 pip stop loss because it'll take you out of your trade right away.
It probably can't take you out of your trade, and you can't be right about your setup. That's the problem. You're probably right, but you have to respect the market.
Yeah.
The information is, well, this market can be very volatile. Be aware of that. So respect the stop loss and respect the trailing stop, because you can probably be on a winner trade, but if you adjust your stop loss in an incorrectly manner, you can probably gonna be vanished out being right about this trade. That's terrible. That's terrible for every trader, you know.
Yeah. So honestly, I'm gonna tell you something. Just, I mean, you guys might feel like these questions are simple because you guys probably have a bunch of experience, but to me, this is actually opening up some alleys for me to understand where to put stop losses and whatnot.
No,
you know?
no, that's not a rookie answer a question. No, absolutely not. I'm telling you that because I have been on a losing trade, being right 1,000 times. I have lost a lot of money making this kind of mistake, being on a 15 stop loss trading the 1 hour. You know, this is absolutely wrong. I cannot do that. I have to make I have to give more room for this 1 hour time frame. It is a very pertinent question. Look, the movements can be bigger on the 1 hour. You know, especially when you are trading volatile movements. We are in a holiday season. This holiday season, the movements tends to be more volatile because, you know, the market volumes are lower, but we're still trading. So sometimes the movement goes up and down in a very crazy manner that we cannot identify a pattern or you know, a setup on that. So these questions, they are absolutely a correct. That's not rookie questions. No, absolutely not. They are very intelligent questions, and it is very important for me to talk about that because many people have questions about this, and we not always discuss this. We are always talking about trading, possible setups, but this kind of managing trades is absolutely important as well.
So you're saying that Christmas in Trump is going to be special, huh?
That's a very strong combination. You have to be aware of that. And look, I have been trading the Brazilian market. The Brazilian market is one of the most volatile markets in the world. So we have been learning here in a very bad way. The US dollar, Brazilian currency here can jumps 200, 500 in 1 hour. It's absolutely crazy. So we just have to deal with that. So being traded in a forex market that a pair just move 100 pips, it's almost easy to understand. You know, our pairs here and our stocks here are very volatile. So I have to understand the movements of the market in a very specific way because it is very volatile. So it is difficult to understand. But since we start to get that, it's you know, become some kind of easy.
So is the Brazilian market ran out of Sao Paulo?
Yes, it runs in São Paulo. It's the Bovespa.
Oh, I've
market,
seen
stock
that.
market.
Okay, I got it.
Yeah,
I got it.
that's the Bovespa, which is our index. It's our US 30, you know?
Gotcha.
It's our 50 most traded stocks, and it's going higher. For instance, we right now are on our higher high of all time in the Brazilian
Yes.
stock market. But despite the US 30, for instance, that it's right now on a bigger high, our stock market is it's cheap for the
For the US dollar.
exactly. It's
The real versus the USD.
yes, it's cheap.
Gotcha.
So the Brazilian markets is absolutely cheap, being on the higher of all time.
Gotcha.
So it's a very curious market, and it's a very volatile market, but it's a very interesting market for learning.
Gotcha. Oh, I'll have to check it out.
Yeah.
Plus, I want to
you
go
can check it
down
out.
to Ipanema and suffer. So
Go to TradingView that have all the Brazilian stocks out there. You're gonna see exactly what I'm talking about. I'm trading forex right now, And every time I talk to my stock Brazilian markets fellow traders, they told me, "Oh, you trade the forex market. You're going to be in the jungle right now. We're trading with the fish. Now you're going to trade with the sharks because here is much more difficult."
Gotcha.
And in fact, it is, because it's much more volatile, despite being a much less liquid market. You know,
Understand.
here we trade $2-3 billion, and
Hmm.
the forex market is $6 trillion.
Gotcha. Gotcha.
Hey, can I interject real quick? First off, I adore you guys. I love that you guys are participating. You get massive brownie points in my eyes. I genuinely appreciate you. Real quick to go back to that topic, for the gentleman who asked, long story short, certain accounts you should trade and move your stop loss up. Certain accounts you should give them more room to move and not mess with them at all. That's how you're going to become the best trader on both spectrums.
Yes, ma'am.
So just so we're on the same page. But yeah, I wanted to say that. And again, thank you guys so much for stepping up. My favorite trade for some of the stuff I'm seeing would probably be Euro NZD. Just so you guys know, it has the most upside potential. We have our breakout move. We're closing above the 50. We are due a pullback. So if you can't emotionally, mentally handle that, then skip it. Mindful there's an interest rate decision. Just saying, that's one of the best trades that I have seen that avoids GBP and avoids the US. So that's what I've got. And of course, odd NZD, but you can only over leverage so much. You got to pick your poison and pick it wisely. If you're gonna, we know which one of those pairs you want to be in. You can't be in too many. So
Jenny, Rafa again. Sorry. I have a glass of wine, so I think I'm speaking too much. But again, regarding this same aspect about the trailing stop on this pair, this Euro NZD, if you go to the 1 hour time frame, I just wanna make a very short comment about that, because uh, I have been on this pair when the triple arrow appears on the 1 hour, and I move my stop loss, and I just got hit on the break even. And now I'm seeing that this pair is going far away, and I was right about this. And as you probably know, I'm a TV broadcaster here in Brazil. I work for ESPN, so I'm not on the charts all the time. So I just watched this absolutely great triple arrow setup on the 1 hour. I went to the trade. I got some pips. I trailed my stop loss to my break even. It went against me with 2 arrows. If you move to 1 hour, you're gonna see that. And then it just went up again. And it just got noticed that I have been out of this trade because I got stopped out on my trailing stop loss, and it was too short for this movement. I didn't calculate it very accurate. It was, let me see when I did enter. I entered as soon as the yellow arrow have appeared. I went up 49, 20, 50 pips. I moved my stop loss. Then it went back on me. Look at the green dots. Look at the green dots. So I got stopped out on my break even. And right now it is incredible 125 pips. So my trailing stop was too short.
hold on, are we supposed to be seeing what you're doing, Mr. ESPN? Are we supposed to be seeing it, or are you just talking?
I'm sorry, I'm talking.
Share.
Well, I can
So
share.
did you re-enter?
I can try to share my screen, but I don't know if I'm gonna manage it. You can go, Jeannie. You can go to the 1 hour time frame, and you're just going to see exactly what I'm saying.
I wasn't sure if you were annotating or if you were.
No, I'm sorry.
I was just clarifying because I'm sure people are messaging. I can't see what he's doing.
Oh, I'm sorry. I'm absolutely sorry. Look at this little yellow arrow. No, the yellow arrow on the left. That's no. After the green arrow, the triple arrow. The last triple arrow, right there. I entered exactly there. I went up. So it went up to this, this first step here, which is the green arrow, a little bit more to the right, to the right, to the right, more to the right, right here. Yeah, exactly. It is 50 pips, I think. This move is 50 pips. And I move my trailing stop to that point. 45, 53, almost 50 pips. And what did I do? I moved my stop loss to my break even. And then it went against me and vanished me out. Look at that. Look at this green arrow, this big impulse that we have. So I just lost this movement. So again, Joe, respect the time frame and give a list, at least 30 to 50 pips. And even 50 pips for a fast mover. Look at Jenny is pointing right now. For a fast moving like this Euro in ZD, it is a short trailing stop because it can move very fast. It lost almost 50 pips in a matter of 8 hours or less, maybe less, for just went up again in my right setup on my right analysis. I lost. How many pips I lost? I don't know. My lot was I think I was trading one lot, so I lost almost $100. No, I'm sorry, $500. So just your stop loss, just your trailing stop according to the pair that we're trading and the time frame you are trading. That's all. I promise.
Seems like it moved 100 pips after that second green
Exactly.
arrow came.
120 pips.
Wow.
120 pips. Look at that. Because I made a mistake.
If you would have had a 50 pip stop loss, you would have been in that still.
Yeah, well,
That's what you're saying, right?
I have traded and exactly according to the triple arrow system, it went on my way, 50 pips. I moved my stop loss to the break even, as everybody says. But even though as a fast mover and a bigger time frame, my trailing stop wasn't supposed to be in 50 pips. It has to be 60, 80 pips, but it was 50 pips. So I got stopped out and then it moved again in my favor. So that's a pity I was out.
Hey, Jenny, I don't know if you can somebody post how to get that ADR on my screen? I think I asked that a few times.
Okay, sweetheart, ready? Listen, Linda, listen. I say that so often that Donna
yes.
thought my mother's name was Linda. Her name is Linda.
Linda, listen.
Linda, listen. So that is called the bar alert. It is in the SuperEZ group. It is in the SuperEZ notification channel. It is in the 6-figure discussion group.
Okay.
And before anybody volunteers to drop it in those groups one more time, I want you to just do me and yourself the biggest favor and go search for it, bar alert. And if you can find it, we will help. But if you can, more power to you. You're going to find a lot of other cool stuff too. And you will be so grateful for yourself that you did. So it is called the bar alert. It's kind of handy. This right here, the reason I like it, it was actually provided by Wise Trader in the SuperEZ group. I try to give credit where it's due for the things I can remember. With all due respect, I get a lot of stuff. But he's also in the SuperEZ group. And this, at the time, I was using investing.com's pip, how much does each, thing you move. And I had to go to the website and do all that nonsense. Now I've got everything I need, one spot, no questions, no drama. So I don't have to check for 99% of the stuff y'all have to check for because I'm on it, right? So that's where this is. It's called the bar alert, and that's where it's at, okay?
Will do. Thank you.
You're welcome. If you can't find it, you can message me, but you have to try first.
Yeah, because you know how it says ADR? I was like, I tried looking for it. I'm like, it must say something about ADR. I never thought it would be called bar. Okay. I'm going to look for it. I'm on it right now. Thank you.
Yes, sir. All right, guys. Hey, I'm trying to keep this to a reasonable time frame. We're on a lot in the mornings, so we're working for 10 trades. We didn't take 10 this morning. We only took 2. We won one, lost 1. From my understanding, I finally hopped off, had some stuff going on, but I love the interaction tonight. So my hope is for the people who are on there tonight, for the people who rewatch this, I'm talking many, many hours of people who re-watch these videos. My hope for you is that you're going to come on here, get out of your comfort zone, come talk to us, come hang out. And even if I'm not, like, some nights I'm gonna be bubbly, some nights I'm not, like, this is the real us in our real lives. So somebody on here is going to give you some perspective. Somebody like Rafa, who was amazing, and Brandon and his amazing daughter, Jose, who stepped up, and everybody else who contributes, Barbara, Donna, all these people, Malik, who's keep asking questions. All these great people are going to be in this team of people who are going to be able to answer questions and ask questions. You're going to learn so much. So I hope that you guys can do that moving forward. We click through some pairs. Please, I know people are making money on GBP, but you don't have to. Please, Rafa,
Let it explode.
hey, Rafa, don't work on your English. I kind of love your voice.
No, Jenny?
You can have another sunshine.
That you can be my
Hey,
sunshine
Jenny.
voice.
Especially with all the cheese.
Uh-huh.
Can you hear me?
Yes, ma'am. We're just playing. Go ahead, Liz. How are you?
All right. I've been here and I've been trying to chime in, but there was so much good conversation going on. I had to listen in because I'm learning a lot. But I don't know if this is the right session to ask about. I was watching your video on your scalp strategy with setting up the two MACDs.
Ma'am, no, we're going to cut you off there. That's actually for discussion only privately in the six-figure membership.
Okay.
So I saw that Donna answered that for you, just so you know. She's kind of the admin and the head honcho. So
Okay.
strategy is private to that group, as well as
Oh.
the stuff that goes with it. So
Okay then. All right.
I'm sorry.
Okay, thanks.
Tomorrow morning. Can you be on tomorrow morning with me?
Yes, ma'am.
Okay, well then we'll go over it then, and you will be first on my list on my desk. Okay.
All righty.
All right. Awesome.
Okay.
Okay, guys. Well, that's about it. Any other questions, comments, anything?
Hey, Jenny. It's Robert here.
Oh, see, and Robert also has the cool Australian voice. See, those are cool voices. How are you, Robert?
For me, it's normal, and I'm sitting here like, hey, everybody else got a cool accent.
Well, because it's cool,
Hey.
right?
Sorry?
Go ahead. It's just the difference.
Yeah.
Cool about it is.
Yeah. So, hey, I was just looking over the triple arrow, and maybe this is something Pat said, but it came to me this morning. Basically, every time the triple arrow is there, I noticed that it usually at least hits the 0.38 on the Fibonacci. Is that correct? In your experience?
No.
Okay, I'm going to completely shut that thought down. Don't worry about me.
No, like, I like the way you're thinking. I like the way your brain is evolving. I think I took it off my chart. Of course I did, because I want to use it for here. Bear with me. I thought I still had it. So, okay, I do still have it. This is the 4-hour chart. Here's what my consensus is. Number one, we know it repaints, okay? So now how do we use this? I, just like everybody else, I got the triple arrow system because I loved the people and I believed in the vision. And clearly I just wanted to spend another $300, okay? Having said that, I was frustrated when I first got it because it kept repainting and all I could think of was, no, I'm not interested. You know, this is the worst thing ever. But the cool thing is, as it repainted, the more times it repaints, the less likely your next repaint is coming, number one, right? So I'm not talking a singular arrow. I'm talking about the set of 3 arrows. So odds are we had a set of 3 arrows here and a set of 3 arrows here, and we're working on a set here. So I'm not talking about how many times the big arrow itself moves. And remember, this little, our Fibonacci line is technically repaint, because as this moves up, this is 31%, and then this is 31%, and then, right, this is 31%, because the market's moving. So that number is a fluid number, and anybody who truly understands the math knows that. Fibonacci is a fluid, moving, consistent thing. It is not one place. So please, 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 please be smart enough to put that with a grain of salt. So again, this is the 1-hour chart. Do I know for sure it's going to come to the 76.4, all right, or the 61.8 or the 38.2? No, absolutely not. You cannot make that. Now, if I were to tell you which one it would come to, the big arrow is based off of, we all know it's the zigzag principle. Anybody who does any coding knows that's where it comes from. But when Pat originally, when I talked to him about it, what he said was it's based off moving 40 pips or more. So I created a strategy. It's in the SuperEZ group. It has step-by-step instructions on how I grew my first big amounts of money using the honest to God triple arrows and nothing else. Okay. So no, I don't mean like nothing else. Let me be more fair. And all the cool indicators and all the cool news and all the cool stuff that goes with it. But how I grew my first really big account using the triple arrows specifically. Let me be more accurate. And what I learned was if statistically, and what I was told, which at the time I believed to be right, was that this moves 40 pips when this appears, and that's what it's kind of programmed to do. And that's what I was told at the time, that I knew my odds of hitting a 40 pip take profit was very high. So I put my heaviest lot size in at 20 pips, my next one in at 40, my next one at 70, of course, each with trailing stops. And then I also had a runner. And that's how I stacked my trades. And I kid you not, I created that, I wrote out rules, and I literally followed it week by week. And I grew an insane amount of money in a very short amount of time. It literally changed everything. So I had made big money, lost big money, made big money, and I had withdrawn, but never to that level. Fair enough?
Yeah, cool. I'm gonna find that video and wear it out.
So you can
Okay.
count on it going about to the 76. You can count on about 20
Sorry.
placement, but don't
Yeah,
do more than that.
I've been doing my fibs the opposite way. So your 76 would be my 3.8, I would assume, or maybe that's 23. Anyway, ignore that whole thing, but I'm gonna watch your video and do the same thing. So thank you for putting all that together.
Definitely, and remind me, Robert, honestly, hold on. That would be a really good topic to go over, is how exactly I was compounding using the weekly compounding chart, using those sets of rules one by one. That's a really good topic to go over on maybe one of these Tuesdays coming up. But what you should know about Fibonacci is it's from top to bottom of the current move. And since the current move is moving, it is moving too. So use your own common sense to know that if Fibonacci is from top to bottom or bottom to top of the current move, and the current move is currently moving. Did you follow all of that?
I did, yeah.
So just bear that in mind.
Cool. Hey, one other question for you. You showed your ideal trade setup at some point, and you've got a few indicators there that auto trend forecaster, and I think you might have had some other stuff that I didn't kind of get. Is that necessary, or do we just use the MACD only now?
This one is oh, you mean for like the regular strategy or for?
Yeah,
Like,
just a regular triple arrow.
okay. So I'm still really biased to my ADX, and I told you guys why this morning. My ADX
Yep.
at the end of the trade that's not moving, not all the time, but enough of the time. So I'm really biased to this. That's still my favorite across the board. I like this MACD because it shows divergence, and I like the way it does show divergence, right? In all fairness,
Yeah.
I like the way it draws it. I have a few others that do it, but not the same way. So that's why that's on here. With the market slowing down the way it did, I kind of went back to following a little bit more in terms of divergence, not because it's a permanent move, but because it's a confident enough move to get the faster entry. So that's what I was looking for. What you see best ultimately should be your best. This is my super ugly, super all in, can't lose for trying. This is it. This chart right here. It's not fancy. It is not proprietary. It is not special. It is not mine. It's just good rules. So the truth is, if you have good rules, you won't lose. Well, you won't overall lose. You're going to take losses, but your wins and losses are going to be effective. So this has so many things in your favor that even if you take a loss, fine, you take it, you stay in it until you have a fresh cross. You have your exit indicators, however the rules you set up to apply, and boom, it is insanely simple. And obviously it works perfectly, but we have to avoid the times where the volume is low. Okay.
Yeah.
It's very easy. This would be my fully confirmed best chart setup. No, nothing. In fact, I'd probably take off the dots.
Okay. Yep. Cool. And that currency relative strength indicator, is that in the group or just on an MT4 normally?
So, good question. The thing is, when I first was willing to start sharing this with the group, what happened was it was free. So I told everybody it was free. And then people would go download it. Only some listened, the rest of them waited. Fair enough. People who waited ended up charging for it. So the one I originally used to make me the most amount of money was actually this one. This is called the absolute currency strength indicator. As you can see, it's not as pretty. It's a lot harder to use, but it works, and it works very well. It's more accurate than the pretty one, but I only have the pretty one so I can teach you guys on a pretty class.
Yeah,
Truthfully,
cool.
the best one. It's called the absolute currency strength. It is free. Whatever pair I drag on the chart, notice how the two thicker lines, you'll see them. So watch, if I drag Australian AJ on the chart, now the orange and the yellow are the thickest, so you can see what they are. And you can change
Yeah,
the shedding so you only see current chart. But this, when you have the crossover, great. When you have them above and below the zero, even better. And it works. It works extremely well.
That's cool. Thanks, Jenny.
You are welcome. All right, guys. Well, that's it for tonight. I'm going to keep these nighttime calls less than an hour and a half, working on a better flow and balance. Hold on. Look. I super appreciate everyone who participated and came and who came and talked and hung out with us tonight. The more we interact, the better we're going to grow, and we're going to gain so much insight from each other. So I am grateful for each and every one of you guys.
Thank you.
Good night, Derek. If you guys have any specific questions, please write them down, send me a message. I'll put your name on my desk and we will go over that in a call. You'll learn, I'll get a topic, everybody wins. So yep, that's about it. I will see you guys next week, or if you're in the SuperEZ membership, then I will see you guys tomorrow morning. I hope you have a wonderful night. Sweet dreams. God bless. Take care.
Thank you, Jenny.
Good night, Jenny.
Guys.
Thank you.